Now, the New York Times has hit a major market milestone with its stock climbing to a record high, about $71.25, capping a remarkable 35% rally over the past year. The surge reflects growing investor confidence that's in the company's digital transformation strategy, which has driven steady subscriber growth and stronger revenues. With a market value of $11.56 billion, solid cash position and financial health rated great by Investing Pro, the media group's successful pivot away from traditional print is increasingly being rewarded by the market. And we see global markets are bracing for another potentially volatile session as investors turn their attention to a heavy slate of U.S. economic data due out today. The main focus will be on weekly jobless claims, a key gauge of the health of the U.S. labor market, that could shape expectations around future Federal Reserve policy. Traders will also be watching a series of other important releases, including trade balance, productivity, and consumer credit data for fresh clues on the direction of the world's largest economy. And Apple and JP Morgan Chase have announced a major partnership shift in the credit card business, with JP Morgan set to become the new issuer of the Apple Card, replacing the current provider in a transition expected to take about 2 years. The deal will move more than $20 billion in card balances onto Chase's platform and marks a significant expansion of JP Morgan's consumer finance footprint, even as the bank prepared to take a $2.2 billion charge for credit losses tied to the transaction. The move is still subject to regulatory approval, but both companies say Apple Card users will continue to enjoy the same features and benefits during and after the transition. And to electronics now, Samsung has delivered a strong earnings surprise, forecasting a much bigger than expected profit for the fourth quarter of 2025, as soaring memory chip prices driven by booming demand from artificial intelligence companies continue to reshape the global semiconductor market. The world's largest memory chip maker said operating profit likely surged to 20 trillion won in the October-December period, more than triple last year's level and well above market expectations, underscoring how the AI-driven supply crunch is supercharging earnings across the chip sector. And to other parts now, Sri Lanka's central bank has struck an optimistic tone on the country's economic outlook, forecasting growth of between 4 to 5% in 2026 as the crisis-hit nation continues its recovery. Speaking while unveiling the Central Bank of Sri Lanka's policy priorities for the year, Governor Nandala said the outlook broadly aligns with government projections, though he cautioned that the pace of reforms will be crucial in determining whether the economy beats or misses expectations. And Chinese semiconductor stocks climbed today after reports that Beijing has instructed some domestic tech firms to pause orders for NVIDIA's H200 AI chips. The move appears aimed at preventing stockpiling ahead of a formal policy decision, while encouraging the adoption of homegrown AI chips as authorities weigh on how and whether to allow access to high-performance H200 accelerators.